Good morning, everybody. Welcome to today's Morning Blast. It is Thursday, the 12th of March, all day. You join myself and, of course, Michael Brown for a very candid market podcast where we give you an update on what's going on in markets, what's been happening, what we think is going to happen later on in the day. And just a general rant about sometimes unrelated market stuff. As usual, caveats apply. Nothing we say here is investment or trading advice. Do your own due diligence. We do not apologise for the foul language and indeed the tangents that we may go on. You take us as you find us. Morning, everyone. Morning, Michael. How are you?
Indeed, yes. Very good morning to you, Ryan. Good morning, everyone. Thursday of the longest week ever. We are slowly but surely getting towards the end of it. Forgive any echo this morning. I'm in a very large meeting room just for me, but there we are. And we're all still crude traders, aren't we? Correlations are basically still at one across the board when you look at financial markets this morning.
At least everyone's a headline trader now. No matter how technical focused you were, now you're a headline trader.
Indeed. So on that note, shall we do some technical analysis?
So should we do some, on day 13 of the Thunderdome, or Operation Epic Fury, as some like to call it, a quick update on markets and levels to watch if you are still trying to cling on to technical levels from our good friend Clive Lambert over at Futures Techs. Gaps galore this morning, basically. S&P been down to 67.06 overnight. Losses dead.
Sorry, Clive just WhatsApped us both going, fuck you.
Yeah, nice one.
Probably fair, actually.
Yeah, fair. We can't mug him off when we're also butchering his content. But anyway, that's the law this morning. S&P has been down to 67.06 overnight, but has recovered. Those key Fibonacci supports are 67.22 and 67.36 are back below for now. So something for bulls to cling on to. Nasdaq bounced off an overnight low of 24,696, which is Monday's Marabuzu line. For those of you keeping count. The DAX and other European indices also gapped down overnight, but rallied to retake the gaps as Clive went to print. So God knows where they will be when you listen to this, if you are listening to it on the playback. Could be 100 ticks lower, could be 500 ticks higher. Who knows? Spin the wheel. But the futures, they saw red yesterday and traded back to Monday's low overnight, where buyers have stepped in once more. 112.14 was highlighted as resistance in the T-notes yesterday on here. That was the high, so hats off to Clive for that one. We then sold off to 111.23.6, then 111.21 overnight. Eurodollar, that's obviously the currency and not the STIRS contract, rallied back to its 200-day simple moving average on Tuesday, where sellers returned. We've been offered since. Dollar yen, almost back to at the January high of 159.45, and we were promised, Michael, by certain people on social media, that would never get that high ever again.
That is actually, sorry, just on that has, I don't want to say it's gone under the radar, but I mean, certainly compared to when we were looking at dollar yen trading around those levels earlier in the year, back in January, it was like the only thing anyone ever spoke about.
Yeah.
The speed of the move is pretty much on a par with what we saw earlier in the year. The level is on a par with what we saw earlier in the year.
And not a single person's mentioned it.
Yeah, don't rule out another round of rate checks or some jawboning or whatever the Ministry of Finance want to get up to. I mean, it feels like the sort of week where they would do that because, they are a little bit perverse in their thinking sometimes.
Yeah, those Japs. Oh, quick, move on.
Oh, God. Don't do the eyes.
They get a bit kinky, don't they? Like two girls, one octopus and all that.
Okay, move on.
Moving on.
Right now.
But you do make an interesting point, which is, and we did mention this yesterday, and I believe probably every day for the last 13 days, that in times like this, what would have been, the biggest topic of the day or the week just completely goes under the radar, such as like that 50,000 job cuts in Volkswagen, the yen. It's amazing how people just get blinded and just get, almost, blinkers on and just focus on one bit of news or one bit of headlines. And yes, it's very important, but it will pay to keep an eye on what the rest of the market's doing.
You certainly can't ignore it. That's for sure.
Exactly. But it's very easy to ignore it. That's the problem. Back to Clive. Metals still trading sideways in the main. Aluminium is the exception, rallying since we last wrote and eyeing the recent high at 35.43 and 50 cents overnight. Above here will be trading levels last seen in 2022. 3,742 and 4,073 and 50 cents are the levels from back then to keep an eye on if you are trading aluminium. Oil benchmarks gapped up this morning. 93.80 is the gap support in Brent. God knows where it is by the time you read this. It could be 70, it could be 170, fuck knows. Gas oil followed suit. That's trading 1079. Sorry, that's not trading 1079. 1079 is the gap in that one. So one to watch for the pullback there. European gas, TTF, also joined in with the gap fest. 51.23.5 is gap support there and is being eyed as Clive went to print. Again, they're not door numbers, so don't get arsy if by the time you listen to this, they're not where we said they are. That's on you. EU carbon felt a big resistance at 74.50 to 86 yesterday and then sold off back to 71.36. And that's it from Clive. Thank you very much, Clive. You're amazing. I'll buy you a pint later and maybe buy your girlfriend one. I'll give your girlfriend a pint. I said pint. Michael.
Yes.
I suppose we.
Well, I was going to say, it's, thank you to Clive. He's got a certain je ne sais quoi about him at the moment, hasn't
What
he?
does that mean?
I don't know.
Right. Look, he asked to get involved and be included. He can't get arsy if we.
Whoa. Sorry. I've just read one of the, we are going off on a massive tangent now. I've just read one of the comments from a certain Mr. Rick Bernard, which says, I presume the sound is bouncing off Mr. B's thinning scalp in that room. I mean,
Wow.
He's not wrong, but God,
Wow.
that's a punchy way to start the day, isn't it?
Yeah. By the way, this obviously is in the live chat for people that are on the podcast going, where the hell are they reading this from? Yeah, but do you know what? I'm just gutted that I didn't think of that myself to be quite fair. But anyway, before I get on a proper tangent, I think, first off, we were talking about this morning before we went on air about, believe it or not, we do have a quick chat to work out what we're going to discuss.
Yeah.
I know it's probably, that's the biggest surprise to everyone.
There is a plan.
But we are trying to think of things other than just Middle East updates, because we do realize that everyone, it's just, it's so much Middle East news out there. So what else can we talk about? So we will try and discuss other topics. If you also have a topic you want us to discuss, do drop us a line on X or whatever. But just in terms of, we do have to cover obviously the Middle East and what the update. So if I just rattle through a couple of the key headlines overnight, Michael, and then you can give us a bit more colour.
Yep, fire away.
Cool. So regarding tanker attacks, bearing in mind that this is as we go to write this or go to say this on the podcast.
Yeah, it's 8:30 Thursday morning for
exactly. We've got a time stamp. And this was actually put together about 7:45, and I've not looked since. So God knows what else has happened out there. But anyway, the tanker attack. So obviously yesterday that was the big news. Apparently Iran used underwater drones to attack 2 oil tankers anchored in Iraqi territorial waters. Crucially, this was near the port of Basra overnight on Wednesday. 1 person was killed, 38 crew members were rescued. The 2 vessels ablaze are Maltese flagged Zephyros or something like that, and Marshall Islands flagged. I'm going to butcher this one. Zafarsi Vishnu. Basically, Zephyros was carrying condensate from the Basra Gas Company, and commercial ports remain open, but the energy implications are immediate. The Iraqis subsequently shut down all port operations, but we'll see what happens there. Iran claimed responsibility by state media describing it as an underwater drone operation. So that's their words, not mine. Bit wider than that, Bahrain, regarding Bahrain, Iranian strikes targeted fuel tanks in the Muharraq Governorate. Again, butchering pronunciations, but that's the least of your concerns. Residents warned to stay indoors and close windows due to smoke sirens sounded across the country. In the UAE, air defense engaged incoming missiles and drones. A drone fell on a building near Dubai Creek Harbour. Since the conflict began, at the time of writing this, UAE has intercepted 268 ballistic missiles, 15 cruise missiles, and 1,514 drones. So it's still pretty active. Saudi Arabia intercepted more than 20 drones in the country's eastern region overnight, where oil infrastructure is concentrated. Italy, they confirmed that its military base in Erbil, Iraqi Kurdistan, has been struck by a missile. No Italian casualties, thankfully. Erbil airport also reported smoke from a nearby strike. Israel, they struck South Beirut again overnight. Hezbollah continues firing from Lebanon, keeping that northern front active. So that's where we are again. It's incredibly volatile. You come back in a minute's time, there'll be another missile flying. One thing I would suggest, and before Michael comes in and gives us more colour, the Iranians yesterday, within the past 12 hours, have been very aggressive in their rhetoric. They've even said they're going to try and attack the western coast of the US via drones and stuff. They've also said that the tit for tat kind of method that they were using before is now off the cards again, and they were off the table again, sorry, and they're just going to go all out. So definitely one to watch. And obviously the action that we've seen in the Strait and these tanks being hit are obviously why we've seen another bid higher in crude. But Michael, what's your take on it all?
Yeah, no, I think you're pretty much spot on there. I mean, obviously, we do appear to have seen overnight, sort of towards the back end of yesterday's session and overnight, a notable uptick in terms of the aggression levels that we're seeing from the Iranian side. And I think it was notable, as you alluded to at the end there. Not only did they say yesterday, various Iranian officials, that they've moved to this idea of what they're calling continuous strikes, they were also, again, and this came from Iranian officials, saying, I quote, not a single litre of hostile oil will be allowed to pass through the Strait of Hormuz. So it does seem as if the rhetoric on that front is ratcheting up quite significantly.
I did see, obviously, we have to be clear that the occasional ship is still getting through. The reason why marine tracker isn't picking up is they're turning off the trackers. Quite wise, if you ask me.
Yeah, I mean, you wouldn't want to advertise that you're trying to do it, would you?
But one key tanker that did go through, and I can see Tracy's on the call, so hopefully I've got this right, because she will shout at me and beat me up if not. If I turn up the two black eyes, it's because she's flown over from the US to punch me. I love you really, Tracy. I'm joking. I love you.
She'd have to join a very, very long queue of people trying to do that.
It's like the deli counter at Sainsbury's. Pick a ticket. Number 42, please. A pound of ham and a kick in the balls for Ryan, please.
Anyway, it's going off the rails this morning, isn't it?
I'm in a good mood. Sunshine. But an Indian tanker was let through. So that's quite interesting. Obviously,
actually, it's funny you mentioned that, because when I woke up earlier on, there was a sources story via Reuters that said that India had been told by Iran that Iran is going to let Indian tankers go through the Strait. And then literally 10 minutes later, there was another sources story, also via Reuters, saying, hang on a minute, that's not true. From the Iranian side, we haven't told them that. So there does seem to be a little bit of, I don't know what you want to call it, disinformation, crossed wires on that front.
Yeah, I think that's an interesting one, because, again, we're probably one of the few people in the room that will hold our hands up and say we are not experts in this. And following all of this stuff, this is why I follow people like Tracy and Tanker Tracker Summit, Tanker Trackers, etc., and a lot of very smart people on. There are very smart people on Twitter. You've just got to filter out all the bullshit merchants.
Yeah.
But this make no qualms about it. The Iranian kind of regime, and how the powers of separation working around at the best of times. Sometimes you might get one person, we've seen it in the past, one Iranian source giving one answer, and but the military side giving another. Now I'm assuming that at the moment it's even worse, because there must be a lot going on with who's in charge. So it's very possible that both those sources are correct, and it's not Reuters. I think it's very easy for people to say, "Oh, Reuters are fucking up."
Oh, absolutely.
That's not the case.
No, and I think, in an environment like this where, you've effectively got two parties on the same side. You've got the Iranian government, and then you've got the IRGC, and that's before you consider, various low-level officials and, we kind of, make light of the situation a little bit, but you do have a situation where effectively so much of the Iranian leadership has been wiped out that the fella who was making tea and cake last week is probably now in quite a senior position. So this is probably this has an effect on the quality of the news that we're getting out of the country.
Hey, look, Mustafa's been waiting for this moment his whole life. Give him a chance.
Well, I did see that cardboard cutout of the Ayatollah that they had on state TV. I just thought, who is falling for that? Anyway, so I think the nub of the matter there is, Iran do seem to be getting more aggressive in terms of tanker attacks in the Straits of Hormuz. It's something that markets are clearly paying attention to. Brent was north of $100 a barrel again overnight. We have come off, a fair chunk since. The front future trading at 97.5 at the moment. WTI is back north of $90 a barrel. Yeah. So again, the market pricing in a renewed risk premium around that. We are going to have, I would imagine, sadly, more stories of this ilk as we go through the day to day. The source of truth, the absolute gold standard on this stuff is UK MTO, UK Maritime Trade Operations. That is the Royal Navy's bureau, essentially, in the Gulf. They are informed of any incidents and they will be the ones who report them. So if you're not following them, then you really do need to be, because they are the ones who will be able to tell you what's going on. The other thing, just in terms of the broader kind of Middle East energy picture that's worth bearing in mind, is we did get confirmation yesterday from the IEA, the International Energy Agency, confirming that their members have agreed to release 400 million barrels of oil from their strategic reserves. This is actually one of the Bloomberg journos asked on Twitter yesterday, those IEA headlines crossed and the crude price doesn't move. What does that tell us? Well, I'll tell you what it tells us. It tells us that it was priced in, because Bloomberg reported on Monday that this is the amount that they were going to release, and it was just confirmation of that.
And also, we are, when we say crude prices didn't move, we're obviously talking about the prompt month, right? We're talking about the spot.
Further out the curve, you would have seen.
And the front month, right? That's, these 400 million barrels or whatever, they're not going to be, they're not going to just arrive on your doorstep tomorrow. This takes a lot of time for this to happen. Therefore, why would the front month start moving on the back of it?
Yeah, exactly that. And actually, on that note, the one thing that we haven't, well, unless again it's come out since I've prepared my notes here. One thing that we haven't had is confirmation as to effectively the flow of crude that we're going to have, in terms of how much is going to be released on a daily basis, when this is going to start, et cetera, et cetera, et cetera. So that's something that markets will be looking out for.
One interesting thing is Japan have probably got, well, my own humble opinion. I know I slated the Japanese this morning. I truly do love the Japanese. So I love you all if you're listening. But one thing they've actually, they are absolutely smashing out the park, and they always have done, is their own energy reserves, because they have no energy themselves. They have to import everything. Hence why they were so big on nuclear. And they've got 200 and something days worth of reserves in their own version of SPR, which is basically held in tanks. That can go to market very quickly. So I'd be interested to see, and I'm looking at the smart people in the room, looking at you, Tracy. I wonder if there's a trade to be made for Japan, basically, in my opinion. They could start selling their SPR off to whoever wants it at these ridiculously high premiums. Make a boatload, literally. See what I did there? And then hopefully, with the war and all this like dies down in 6 months' time, they buy it back a lot cheaper. Now, if I was in charge of, Japan's
big difference there.
Yeah, if I was in charge of Japan's crude reserves, I'd be seriously looking at a cheeky trade. But that's just me.
Yeah, exactly. I guess we should move on from geopolitics.
Just quickly before we do that, I just want to have because I know you want to talk about central bank pricing and stuff,
which is also related to geopolitics. We just can't get away from it at this point, can we?
But one thing I did want to flag, and I'll probably put out an article at some point. It's about the whole market desensitization question regarding.
Oh yes, actually you did, didn't you? Sorry.
Because the core idea is a tanker attack at the start of the conflict would have sent oil surging sharply higher, and it did. Overnight, two were set ablaze, and Iraqi shuts down its oil ports. Bahrain and fuel tanks hit, yada yada yada. We could go on, and markets had already largely priced in the risk. Therefore, before the Asian Open. Now, why this is important is because if you're not used to how markets do desensitize to the repeated headlines, and they almost, you need to be aware that they need a worse headline or a more exaggerated headline to have a similar move to what they had previously. You will start you will, and it's a very easy trap to fall into if you've never headline traded before, especially on an event like this. You will see, you'll look at the chart, see a headline, say, well, next time I see that headline, I'm going to buy it or I'm going to sell it because it's going to have that reaction. If you do that, you will lose money, because markets do get desensitized to these headlines that keep breaking, and they want more. They want a bigger story. They want a bigger ship. They want all of this being like kicked on. So it's something that it's a really important part of watching markets in this time. Repetition of the same headline reduces the surprise, therefore reduces the impact to market. So I just wanted to do a quick word of caution. Again, I might put out a little short piece later on if I can find some time. But I think you get my point here.
Yeah, no, and it is an important point, actually, because, there is sort of a natural, or it's an easy assumption to effectively go, every time you see a headline that says a similar thing, you're going to see a similar market reaction. As the conflict wears on, that's very much not the case. And just to stress, we're not sort of diminishing the significance of the events in question. I don't think anyone wants to see tankers being blown up or drones hitting buildings or whatever it may be. But from a purely financial markets perspective, the impact does diminish over time because it is information that is essentially discounted. And I think we actually mentioned this last week where, we got to a point last week where, these headlines around Iran launches strikes at Israel, Israel launches strikes at Iran. I mean, we became desensitized to that within a couple of days because you just kind of assume that that is going to continue for a period unknown. And as a result, it doesn't impact the price when that news breaks. But there we are. In terms of the other thing I did just want to mention is central bank pricing, which has gone absolutely mental over the last kind of week or so. There's a few kind of moving parts. And again, we are a bit pushed for time, so maybe we'll revisit this at some point. Just to give you the sort of overall view of what markets are currently looking at in terms of rate pricing. The next 25 basis point cut from the Fed, that's now all the way out in October. That had been priced for June before everything kicked off in the Middle East. But it's really here in Europe where we've seen much larger moves. Money markets now pricing a 50% chance that the Bank of England will hike rates by the end of this year, and money markets pricing about 40 basis points, so effectively one hike plus a bit more from the ECB by the end of the year. I think there's two things at play here. The first will be a lot of positions have been washed out and people carried out of the market as a result of the violent moves that we've seen. That was certainly at play in the European rate space towards the back end of last week and also the start of this week. So do bear in mind when you're looking at, Bloomberg or Reuters or whatever, yes, it is a market implied probability, but there's also actual speculative trades that might just be getting stopped out that are skewing those odds quite considerably. The other thing is, I think market participants are looking at this through quite a myopic view, which is basically energy prices are higher, which means inflation will be higher, which means that central banks must tighten policy and must raise rates. I think it's important to remember that, and actually Chris Waller at the Fed put this well on Friday when he's on Bloomberg TV, is that generally speaking, central banks will look through the impacts of energy prices on inflation. The reason for that is very simply energy prices at the best of times are volatile. They're even more volatile than usual now. That kind of goes without saying. And secondly, where you set interest rates does not really impact crude. You could have interest rates at 0, at 5, at 50. It ain't going to change the price of a barrel of crude, certainly not right now, given what's going on in the market. What central banks mainly concern themselves around is what we will call second round effects. And what I mean by that is if consumers feel that inflation is moving higher again, do they start to ask for bigger pay rises? Do we get a wage price spiral? Or on the other hand, if inflation is rising again, does that dent demand more broadly? We've all only got a finite pot of money coming in and on our paycheck every month. If you're suddenly spending, 10% more on energy as a result of what we see, that's 10% less to go and spend in other sectors of the economy. So you see something of a demand shock. So it's what I'm trying to get across is it's not as simple as energy prices move higher. It means central banks must raise rates. Yes, they may sound a little bit more hawkish, but I think on the whole, G10 central banks are very much likely to, as much as they can, stay in this sort of wait and see mode for the time being. We are, as Ryan said at the start, 13 days into this. We don't know whether there's another 13 days, whether there's weeks, whether it could be over relatively quickly. We simply don't know at this point. And central banks are not going to overreact. Markets naturally overreact. Markets go to one extreme, go to the other. That's how markets work. Policymakers do not work like that. So the overall message being treat that central bank pricing with a huge dose of caution.
Yeah, exactly that. Is there anything else for us today? Or?
We do have a few bits and bobs on the data calendar today. I mean, let's be honest, none of it matters. We get weekly jobless claims numbers out of the States at 12:30 this afternoon, London time. We've also got building permits and housing starts from the States as well. I mean, if you're listening to this and you think that's going to move markets, then please give your head a wobble because it just isn't.
Could I be your counterpart?
Well, yeah, actually, if you think that is going to move markets, please ring me after the show and open a Pepperstone account. That's a joke if compliance are listening.
Off that.
Besides that, we do have a few other bits and bobs. There's a 30-year bond auction out of the States at 5 o'clock this evening, London time. The 3 and 10-year sales this week have been a bit soggy, to be honest with you. Both of them have tailed the when issued by a fair chunk, so that doesn't bode especially well for the 30-year sale later. It's also not really surprising. If we are in an environment of higher inflation, there's naturally going to be less demand for government debt, so that shouldn't be a surprise. And then we've got a few central bank speakers, all on financial stability, which is going to be boring as hell. And notable earnings today come after the close from Adobe. But fundamentally, it's just going to remain a market where everyone is headline watching and everything is moving on the back of where oil trades.
No, exactly that, my friend. Exactly that. Michael, thank you as always. Listeners, thank you so much. We hope you're staying out of trouble and staying profitable, or at least not doing your ass.
That's technical term,
I'm here all week. But yeah, whatever you're up to, keep it tight, stay safe. We'll see you all tomorrow. Much love.
Well, I might see you later, I suppose.
Well, if you're lucky.